yours.
Thanks, Charlie, and hi, everyone. Pleased to be able to share some of our story with you today. This is I'm using material from a presentation that I used at CogX recently, and where we also announced a partnership with Bjarke Ingels, who's an architect. But I wanted to start, first of all, with the why, because companies need to have a reason for being, particularly in our case. It's a big idea I'm talking to you about. And so can you see my screen okay? Yeah.
All set. Yeah, perfect.
Yeah, great. So we all know that we need to move away from fossil fuels, and we can electrify the fleet, we can shut down our coal-powered power stations, and move to renewable, but we can still get it all horribly wrong. And I want to share with you today why. Part of the reason is that to enable the green transition, we're going to need a lot of new metals. It's very, very metal intensive. And in fact, the World Bank came out a month ago with a report that said we would need to produce 5 times the amount of current metal production to meet the metal demands for the green transition. Why? Well, because an electric vehicle requires a lot more metal than a combustion engine. To generate a megawatt of offshore wind, offshore energy, it requires 9 times more metal intensity than coal-powered. But there's a little bit of good news, and the good news is that these metals are very recyclable. So once you produce them, not that this happens so much today, but once you produce them, they can be recycled. But the bad news is that the clean transition is only one of the demand drivers. The other demand driver is the development, the industrialization of the developing world, plus the fact that we will have a few billion more people on the planet by the turn of the century. So it feels like we're playing a game of whack-a-mole. We've whacked down fossil fuels, but up popped metals. And so it's a different resource, but it's the same dirty business. And why is that? Well, one of the things is geopolitics. Now, if you look at the concentration of the top 3 countries in oil and gas, you can see it's a lot less than the concentration of battery materials, for example. And China, in particular, has done a fabulous job of securing a leadership position in the automotive battery business. We think of them as lithium ion, but they're mainly very metal intensive with nickel and cobalt. And if we just look at one of those vehicles, they contain a lot of copper, nickel, cobalt, and manganese. And these 3 of the nickel, cobalt, and manganese are for the battery. Copper is for the wiring. It adds up to around 155 kilograms of just those 4 metals for every electric vehicle. And so if we look at that on what do we need to do to produce those metals on land? Well, just to produce 155 kilograms of metal, we've got to disrupt 156 kilograms of land. It's about the size of 10 car parking spaces. And we've got to destroy around 570 kilograms of biomass. Why? Well, because land-based ores are very 3D. You've got to rip down trees, dig up dirt, unleash a whole heap of carbon. In fact, just to make that one battery for a mid-size electric vehicle, you'll release around 9,000 kilograms of CO2, and you'll take away the potential of 2,000 kilograms of sequestered carbon. So it's quite impactful. And these metals are coming from some of the most biodiverse areas on the planet. Indonesia is the #1 nickel producing country. It's also the 3rd most biodiverse area in the world. The Democratic Republic of Congo is 70% of the world's cobalt comes out of there. Plus, of course, when it comes to cobalt, artisanal mining still has 5, 6, 7-year-olds racing down it. So once again, if we look at impacts, to make that 155 kilograms of metal, we've got to move around 64 tons of ore and waste material. So 25,000 kilograms of ore, but to get to that ore, you've got to move aside a whole heap of overburden and waste. And what do you do with it? Well, they often put it into piles, or they tip it into rivers, unfortunately, into oceans. And then they create these tailings dams because land-based ores have a lot of deleterious elements like arsenic and mercury, which means that you can never release them into the environment. So you keep them in tailings dams like this, and they have to be kept forever. But sometimes it doesn't work. And we saw this in Brazil recently, where you have two of the world's leading mining companies, BHP and Vale, with tailings dams bursting. And so, and even worse, here in Indonesia, #1 nickel producing country, because it's on the tectonic plate, they can't have tailings dams, so they tip all the tailings into the ocean. It's horrible. So if we look at the impacts of just producing that one electric vehicle battery, it's around 13,000 kilograms of CO2 emissions, generating 64 tons of waste, using 45,000 liters of water, and creating 58 tons of toxic material. So we prepared a white paper recently, which we launched on Earth Day, which was, we funded it, but it was independently authored, very heavily peer reviewed. And we said, imagine if, let's just focus on electric vehicles, because these metals are used for a whole variety of things in society. In fact, you know, a lot of things. But we said, let's just focus on the transport fleet. And if we were to convert the 1.4 billion passenger vehicles today, let's just say through shrinkage, through, you know, better utilization, it becomes 1 billion. So we'd need 155 million tons of those four metals. Now, most of us have been to New York. Just imagine Central Park. We would cover all of Central Park in a layer 5.4 meters high. And to get those metals, we'd have to mine the entire area of New York State and Connecticut. And we'd have to destroy around 570 million tons of biomass. Now, just to put that into perspective, the 7.8 billion humans on the planet, we account for about 70 million tons of biomass. So, you know, when you add together plants and animals, you know, 570, it's a lot. We'd also take a big chunk out of our carbon budget. We have a carbon budget to try and contain global warming of 222 gigatons. So adding up all of those impacts, you know, we'd release 13 gigatons of CO2 emissions. We'd generate 64 gigatons of waste material and use 45 gigatons of water and generate 58 gigatons of tailings. So our material operating system needs a serious refit. We need to hit the reboot. One of the things we need to do is reduce consumption, reduce demand. We can do that by ride sharing and by higher utilization. We can also potentially improve the way that we're currently looking for land-based ores. We can make sure that we use renewable power. We can make sure that we're recycling the water. But the challenge there with land-based ores is that the grade of the material on land is decreasing. Last year, the average grade of copper mined was less than half of 1%, which means that you've got to dig up all of that material. You've got to treat it, 1,000 kilograms of material. You're really looking for 5 kilograms of copper. And so the other 990 plus kilograms is all waste. It either goes into waste piles or tailings dams. And if we were to take a planetary perspective and say, well, where would make most sense if we had our time again? Where would we go? And we'd probably look at the oceans. And in fact, I think almost certainly we'd go to the oceans for these metals. And why? Well, in my hand, I don't know if you can see, but this is a polymetallic nodule. And it was, the one in my hand is about 7 million years old. And they precipitate all the metals that are in the ocean water or that sit in the sediment on the ocean floor. And they grow a little bit like a pearl grows. And it was described by one of the forefathers of the law of the sea back in 1967, trillions of ugly little rocks lying in the darkest depth of creation. And it just so happens that everything in this nodule, it's known as a polymetallic nodule, is what we need to build an electric vehicle battery. It's an amazing coincidence. So a battery is made up, we saw before, the four metals, manganese, nickel, cobalt, and copper. And that's what this nodule has in it. People often say, wouldn't it be great if they were filled with gold? But it's like, no, we don't need more gold. The amount of gold mined, the majority of it is used as stored value. What we need are base metals to be able to build our way away from fossil fuels. And an added bonus is that we have none of those deleterious elements like arsenic and mercury in here, which means that we don't generate those horrible tailings dams. And the amount of material we have to move is 75% less when it comes to the metal bearing ore to produce that battery. But when we include the overburden material, it's like 10% of the material that we're going to have to handle. And that's partly because there's such high grade. Every single thing in this nodule is saleable and usable compared to the pile on the right-hand side. But we will have to disturb some seabed, right? If we think about those 1 billion electric vehicles that we need to build batteries for, we'd have to use around 500,000 square kilometers of ocean floor. Now, the good news is the ocean is 360 million square kilometers. And already in this area where these nodules are, more than 3 times of that 1.4 million square kilometers has been put aside as preservation zones, never to be touched. So we can also dramatically reduce the impacts. So if we think about those CO2 emissions, if we build those 1 billion electric vehicle batteries using polymetallic nodules instead of land-based ores, we'll generate more than 90% less CO2 emissions. We'll generate zero solid waste. We'll generate virtually zero tailings, and we'll use about 90% less water. And water is going to become a very precious commodity in our future. So if we compare our land base, so there's about 360 million square kilometers of ocean compared to 150 million square kilometers of land, we will use more seabed, but the fact is the seabed we're using is known as the abyssal plain. It's around 4,000 meters below sea level. It's in the middle of the Pacific Ocean. And there's not much going on down there because there's no light, there's no food, you don't find, coral reefs, you don't find an abundance of fish floating about. Most of the organisms are actually in the mud sediments there. They're very small microbial organisms. So if we compare the biodiversity impacts of our area in the ocean, we will impact around 42 million tons of biomass, and more than 90% of that, in fact, it's about 97% of it, is actually the land-based processing, compared to around 580 million tons of biomass that we'll consume if we continue to get these metals off terrestrial deposits. So people often say, well, we know more about the moon than we know about the ocean. Not true. This part of the ocean we know a lot about. In fact, there's been almost 200 environmental cruises. Our company, DeepGreen, has completed 7 cruises in the last few years. And what those cruises are about is understanding the landscape in which we're operating. We have mapped down to centimeter accuracy, vast areas of the ocean floor. We have very large ocean scientific research programs underway. So we know a lot about this one area of the ocean. And our company will spend around $65 million in the next few years on our ocean science research program. We have engaged many of the world's leading ocean science organizations. We're doing a seafloor to sea top ocean science program, more than 100 studies. It's going to be groundbreaking stuff. And what we're looking for are what are the impacts? What's going to happen? How quickly do these areas recover? And there's early signs are there's very, very good news around all of that. Another nice factor about what we're doing is that our areas, so this area in which these nodules are located, and I'll show you a map in a moment, are known as the high seas. So they're the common heritage of mankind. And so we actually have 3 licenses in the area, and one of them is sponsored by Nauru, another Kiribati, and the third Tonga. And so basically, it's an opportunity for those developing small nation but big ocean states to participate in a resource that they would otherwise not have access to. And that will mean some economic prosperity for those nations in the future. It will mean jobs and education and some hope for future generations. And of course, the other thing we need to do in the medium to long term is to stop extractive industries. So we all believe in closing the loop. And of course, metals, as I mentioned earlier, are entirely recyclable. But at the moment, there's not a heavy emphasis on recycling. And so at DeepGreen, we're very focused on not just producing these battery materials and selling them. What we want to do is to produce them and rent them out on the basis that we get them back, because that's how we're going to keep the loop closed. It will ensure that every single atom that we put into the system comes back to us. And that's an opportunity that in the future years, we will stop extracting metals like nickel and cobalt. But at the moment, that's an impossible task because there's not enough metals in the system to be able to build these batteries to enable us to move away from fossil fuels. And of course, using distributed ledger technologies, whether it's blockchain, we'll be able to keep track of when we collected, where it was shipped to, how we processed it, who we sold it to, and what car it ended up in. So just imagine being able to have a full blockchain record of our metals as they move through the system time and time again. So this is where we are. So we have coast of Mexico, and about 1,000 miles to the west is this one little area of the 360 million square kilometers of ocean. There's one area of interest. And the reason why it's an area of interest is because, as I mentioned earlier, these nodules precipitate the metals that are in the ocean waters or in the sediment. And so back when the Andes and the Rockies were covered in nickel and copper, all of those metals eroded into the Pacific Ocean. And so that's why these nodules are so valuable. There have been nodules discovered in other oceans, but they're not worth recovering, and they're not economic. And the white areas here are other license holders. The yellow, black, and red are deep green. And the boxed areas are the preservation zones, areas where no nodules will ever be collected. And we have a lot of nodules, so we've been able to very accurately estimate through survey techniques and through sampling how many nodules we have. We're a Canadian company, and so this is a summary of our resource statements. We know we have 893 million tons of nodules on the yellow area and more than 750 million on the dark color. And that's enough to build 255 million EV batteries. So I thought I had a slide to show you just how I'll come back to the others in a moment. But this is how we map the area. You'll see this is our boat that's moored down in San Diego. We throw an AUV off the back of it, which basically runs just above the ocean floor and gives us really detailed bathymetric survey data of what's down there. And then we drop these box cores at very regular intervals. So we are able to capture an exact replica of the seafloor. We bring it back up, we weigh it, we study any organisms that may be there, and we also test the grade of the material. So resource certainty is very, very high. So one of the challenges we have, though, which is why it's interesting to talk to your class today, is this is a big boys game, right? So just to build one of our projects, okay, and so we've completed our preliminary economic assessment. We know that the sweet spot is to produce a system that collects around 5 million tons. And our plan is to have 10 of these systems, right? So, and one system will generate around 2.4 billion of revenue and about 1.4 billion dollars of EBITDA. So pretty profitable. But the challenge is that it's also pretty expensive. You'll see here that CapEx, including offshore and onshore, is about $4.5 billion. So that's a lot of money. So we've been busy looking at, how do we find a way of getting around that? I mentioned before, our ambition is to have 10 projects. We already have enough defined resource to build 7 of those projects. Now, one of our strategies has been to take advantage of some of the structural changes going on in the industry. So if you think about the DeepGreen Strategy, one of the objectives when I set out on this mission was to stay as capital light as possible, because when you have to go and raise billions of dollars, you can end up diluting yourself to nothing. So that's not good. So what we said is, let's create a strategy of 2 bookends. At one bookend, it's let's secure the best ground, because once the areas are gone, they're gone, okay? They're under license. So securing the best ground is very, very important. And at the other end of the strategy, the other bookend down here under product, it's how do we build a direct relationship with the customers? And in our case, it's mainly the electric vehicle manufacturers or the battery cathode manufacturers. And we've been pretty successful in doing that, because those companies, for the first time ever, are wondering where are they going to get these materials from in the future? Because all of a sudden, China has done a great job of monopolizing battery materials. And one thing of COVID, one impact of COVID is that whenever commerce gets going again, well, we've seen with Tesla, they've done a pretty good job of meeting their numbers. Other auto manufacturers have crashed and collapsed. And when they do come back into business, the focus will be how quickly they can move into electric. But then when it comes to the job of picking up the metals, the nodules, shipping them and turning them into battery materials, our strategy has been very much to partner with people who have the most to gain or the most to lose. So for example, the offshore oil and gas industry is in dire straits. It's heavily oversupplied. Most of those companies know that it doesn't have a great future. Even if oil prices get back up to $70, $80, $100, in the scheme of things, it's going to be a blip. So those companies are saying, how can I take my assets and my expertise and deploy them to a new industry? So Maersk is one of our shareholders. Allseas, who are the world's largest pipe layer for the oil and gas deep ocean industry, is one of our shareholders as well. And we have a very busy work program. We're in the middle of our feasibility right now. We have 8 main streams of activity, ranging from defining the resource, doing our environmental work, designing the collector system, which we're doing with our partners, getting through the regulatory environment, processing onshore, dealing with the customers. It's a busy business. Generally, how it will work, by the way, is production vessel up top and remote operated harvesters that will just move. We call them gentle giants. They'll basically just move along the ocean floor, collecting nodules, and they'll be pumped to our production vessel. So we came up with a way of addressing this $4.5 billion worth of CapEx. And one of the ways was to, we recently bought a distressed drill ship. In fact, we didn't, but one of our shareholders did, Allseas, acquired a drill ship, which was a $700 million asset 8 years ago, which they were able to buy for less than $20 million. And it's perfect for repurposing into what we need. And so what we've been looking at is how can we get our business into production for as low a CapEx as possible? And because we have such an enormous amount of resource, the scale opportunities for us are there, providing we can get the first one working. And so we are pretty well ready to announce our first system, which will be 1 million tons. Keep in mind, our ambition is to lift 50 million tons, but Project Zero, as we call it, will lift 1 million tons of nodules and process them part of the way. Won't process them all the way to battery materials, but part of the way. And so as an organization, we are busy talking to industry, talking to partners, talking to the suppliers to the conventional mining industry about how they can rethink their business, how they can think about tolling or processing ores like our nodules into battery materials as a service. So don't sell me $1 billion system. I'll pay you for every ton you do. I'll come and install it, and I'll pay you a nice fee every year. So we're talking to them about how they can change their business models as well. One of the other things before I hand it back to Charlie is that we recently announced, well, we haven't announced it yet actually, but we've signed a contract with Bjarke Ingels. He's one of the most respected, brilliant architects on the planet. And we want to bring beautiful form to great function. And, you know, we're going to have hundreds and eventually maybe thousands of people working in our production and our ocean science research platforms, 1,200 miles offshore. It takes 4.5 days to get there. So it's a long way out. And so what I said to Bjarke is what I want to do is have floating cities out there where these people, you know, you don't say goodbye to your partner for 8 weeks. Instead, you go and live out there. Your children live there. They get schooled there. You live in a truly closed loop type environment. And of course, you know, displacement of coastal communities is going to be a theme of our future. And 2 of our sponsoring states, Tonga and Kiribati, are most at risk of disappearing through rising sea levels. So it's kind of a nice connection. You know, this is a very industrial looking harvester, which, you know, we want to create a more beautiful looking harvester. We want to create beautiful processing plants that can coexist in more urban societies. This was a waste recycling plant that has just been built and opened in Copenhagen, which Bjarke designed and built a ski slope on top of. So, you know, form and function come together on this project. And yeah, I think that's a good time for me to take pause.
That is fabulous. I'm sure we could spend a lot of time talking about this. Why don't we do, I think we're going to end up running a little bit over, which is perfectly fine, if that's okay for you, Gerard. So if we take just a couple minutes, if we take just a couple minute comfort break, let people kind of take a few deep breaths after that, which was really, really, really interesting. And then, yeah, and then we'll get into some Q&A. And particularly, I think people probably want to dig in with you about that, about the money side, you know, which is, it sounds like you guys have put a lot of thought into how to create a platform that can do this without just, you know, a big, you know, multi-billion-dollar check right off the bat. So with probably some questions to dig into that. But let's give ourselves a couple minutes just to kind of exhale a bit, take a quick comfort break, and then we'll restart in just, let's say, call it a couple minutes from now.
Okay, sounds good.
Thank you.
Can you guys still hear me? Yeah, cool. Are most of you in London or?
I think so. Charlie, did you see my note in the chat?
I saw one from Candace.
No, I wrote to Charlie
Ivana?
directly, but maybe he got up.
Okay.
So I think maybe 50-50, 50% of us are in London, 50% are spread across. I'm not sure if you can hear me.
Yeah,
Hi,
say that again, please.
Candace here.
Yeah, so I think 50% of us are in London, but not the rest. You will hear people from pretty much every corner of the world are in this call now. So.
Yeah, good.
So Gerard, what's your background in?
You know, my background, I grew up in Australia, and I started my first company at university. And I was lucky enough to build a heap of, well, not a heap of, but a number of companies. I was manufacturing batteries in China back in the 1990s. I had a telco business when the industry was deregulated in Australia, which I sold to Singtel. And then I started a software as a service business in 2001, which I grew to 30 odd countries. So I came into, I first invested in ocean metals in 2001, not because I knew anything about them, just because I was fascinated that the oceans had all these metals, and I figured it must be much lower impact than land-based mining. And then on that project, I helped them raise some money, and we floated the company. For me, it was an amazing deal. I made, a lot of money out of it. But then I learned about nodules. It wasn't focused on nodules, that company. I learned about nodules, and then I initially helped I funded DeepGreen, and then I took over running it as chairman a few years ago. So
Wow.
as I started to get deeper and deeper involved, and I guess realized the impact that it could have on climate, and as I started to understand the impact of climate change, what it really meant, because I guess like so many people, I was like, yeah, I know climate's an issue, but I didn't understand how big an existential risk it posed.
What made you realize that?
Data. Yeah. Just
Were
data.
you an engineer by training?
No, I was an economist and marketing major.
Huh.
And intuition major.
Could I, I've got a couple of interesting questions here, but before I do, could I ask you to just narrate for us a little bit that fundraising process? Because one of the things that we want to kind of situate, this is a big play, and you're going to need a lot. It's a great template for what we're doing, because it's going to need a lot of money at different stages, and the sources of capital will change over time. So would you just narrate a little bit? So you started with kind of basically founders capital, and then kind of up to what are you kind of looking for in the next sort of round, or what will the company need in the next round?
Yeah, I've raised about $150 million so far, and I will need another $250 million to get to the other side of Project Zero. And so I'm busy doing that right now. And, it's an interesting market, right? Because, of course, the oil crash, the coronavirus, a lot of people lost their mojo. And, I had a lot of strategics who were dealing with me, and then all of a sudden, they've kind of disappeared. But I still have a number of them there, including one of the big oil majors, one of the big mining majors, and then a whole heap of other companies mixed in. So my plan is to get a deal. I'm very fortunate that I also led the investment rounds, even though, investors like to see management putting skin into the game, of course. And so I was lucky to be able to do that. But we've also looked at, how we can pass off some of the investment to our partners, like we did with Maersk, like we did with Allseas. And we're also investigating, how we can use some momentum trends as well. So for example, you've probably read about SPACs lately. SPACs were very out of favor, special purpose acquisition corporations, and then all of a sudden they can become in favor. And so us as a company, we just have to be very nimble, and we have to be, we almost floated the company about 4 years ago, but I killed it. Very happy that I did, because, it's a very difficult public market to operate in for a company at our stage of development. But we are getting to a stage now where we're sufficiently advanced and people are sufficiently believing in the green transition that, we think maybe now would be a more interesting time. So we're talking to strategics, we're talking to financial investors, we're investigating the use of SPACs, not for the company at the moment, but more for some of the subsidiaries, because as I mentioned, we have a lot of resource, and the trouble is getting paid for it all, because we have 1.6 billion tons of polymetallic nodules, enough to build 7 projects that would generate $1.4 billion of EBITDA each per year for 30 years. So no one's going to pay me for anything beyond project one. So I'm always evaluating, how do we not dilute the whole company? How do we get enough money so we can develop a project? And maybe it's through subsidiary strategy. So we're evaluating that all right at the moment. We don't have a bank working for us. We're talking to a couple. I've kind of done my own banking, and we have a network of friends out in the marketplace who are very, helpful in introducing us to investors and so on.
Great. Personally, I have to say, I love the idea of a tolling arrangement. I think that's a really promising thing. So maybe at some point we can talk about that offline, but I think that's a very interesting kind of concept to bring into this, where you get a contractual, you can lay off some of the counterparty and commodity risk on somebody who's front end and back end. Could be a very elegant way to go about it. But anyway, you and I can talk about this some other time. Let me get to a couple of students. So Ida has a very interesting question here about kind of the supply chain. So if the proposition is that this is going to work in some way, you guys are going to benefit, and there's probably some other industries that they're going to benefit as well. So Ida, do you want to unmute and ask your question? Let's see her there, but I don't. Yeah.
Hi. Yes. Hello. Hi, Gerard. So I just have a question. Who is manufacturing the equipment that you have, like the big giants and all the other equipment that you're using for the exploration? Yes.
Good. I'm so pleased how you've caught on to our gentle giant's name so quickly. But the pilot mining system, which we'll be launching, is being developed by Allseas. And so we took the approach that they have 600 engineers. They have been operating in the deep ocean for 30 years, not collecting nodules, but laying pipe and cable. And so we said, why don't you come and develop this with us? And so that's been a very successful strategy. But going forward, we don't know what the most efficient way of collecting nodules will be. And we are dealing with a Norwegian company who have an entirely different concept. And we're dealing with an American company who have more of a drone concept. And from our perspective, we're like, we have the resource, we own the resource. So come to us and we'll let you contracts to come and collect them for us, because, a lot of those companies are otherwise, they own assets that are going to be floating chunks of steel, whereas we can turn them into income producing assets for them.
Great. How about Chiara? Do you want to ask your question there? I think deep tech is a very apropos name for what we're talking about now. So do you want to unmute and ask your question?
Yes. So, hello. Yeah, deep tech is the term that came to my mind as soon as I understood what you were describing. So I think it's really spot on. I'm working with a group of students around how to finance this type of projects, because we understand by our research that the de-risking part is very challenging when it comes to looking into new technologies that require high capital just to prove the concept. So I think this applies to the nodule collection that you are proposing here. We are thinking about blended financing models. So my question to you is: you mentioned you speak with private companies? Did you look into public institutions? And if not, why? Yeah.
We did, and please God, may courses like Charlie's, spurn the emergence of a new industry, because those companies historically will say, look, yes, we're focused on ESG, but often what that means is they want to buy wind farms. They just want to allocate some money into a pretty low risk asset. So it's very, very frustrating. And so we spoke to many of them, and generally it was, you're too early. And so what we went back to was more a strategic path. But we do have some of those institutions who have now said, okay, we've done our work, we're in. Next time you do the strategic round, we'd like to come in on the back of it. But I think, you know, I get a little bit disparaged by just how ingenuine the venture world is, coming from big financial investors. On the one hand, they'll say, we want to get involved in these opportunities earlier. But then when they dive into it, they go, oh, but the regulations aren't quite final yet, are they? And so it becomes very, very frustrating, because really what they're looking for is every single dot to join up. Whereas if you're a strategic industry player, like an oil exploration company, which, you know, ironically, you know, love this, because as fossil fuels decline, you know, you need a replacement industry. And so they understand that that gets sorted out during the development phase, during the feasibility process. And so, and it also helps when you have a committed management team who have skin in the game, who have passion and drive, and, you know, are stubborn mules.
Yeah.
Like we are.
You know, I think that if I could just add, because one of the things that's very, as I've kind of set out of the premise of this course, is that clean tech investing is very different, because the context is different, but it's absolutely the same as a lot of traditional industries. And I think one thing that, you know, that in what you're talking about that makes me think is that, you know, there'd be a lot of people in this class who have an oil and gas background. And, you know, what you're talking about is really, you know, in terms of the valuation of the company today, or what its value is, there's something very analogous to sort of, you know, probable and proven reserves that, you know, would be, you know, property. So you own property, and that property has resources which have lifting costs, which have, you know, certain environmental sensitivities that have to be worked out. But there is a potentially bankable you know, resource there that can be used to raise capital. And I think, you know, there's probably a lot of those kinds of frameworks that haven't been exploited in clean tech and clean energy, you know, at all. And very surprisingly little of capital markets innovation relative to what's happened in oil and gas, when you think about all the different ways in which oil and gas companies or mining companies are able to raise money. It's, you know, it's not just as listed companies, but royalty trusts and REITs and all sorts of kind of other things. So, you know, if you own that resource, which it sounds like you do, then, you know, that's what a massive head start, because then you have a number of ways in which already that can be, you know, in some ways monetized in a capital raising process. And, you know, depending upon the business model, you can kind of, you know, tweak that to kind of capture economic rent, depending upon, you know, how you see it going forward.
Yeah, that's right. And I think we currently hold exploration licenses from the regulator, and the final code was due to be adopted this year, but COVID interrupted that. So we anticipate it will be adopted next year. But once that final code is in, you know, you tend to find the big companies are very cautious. So then it's like open for business. And, you know, our strategy was, well, when the big boys, whether it's mining majors, battery materials, or oil and gas companies come looking, they're going to find it's all gone. And we're kind of the only pure play operator. All those other licenses are sovereigns. You have to be a sovereign or sponsored by a developing nation to have a license area, because it's the high seas and it's the common heritage of mankind. So. Yeah.
Great. How about if I take just one more question, because it's getting late for you. I'm sure we could do this for lots of time. Kind of the final question here, Philip. Really nice one about the unit economics. So do you wanna go ahead and ask your question?
Sure. So Gerard, fantastic presentation.
Thanks,
You're welcome. Just a quick question about the costs as it relates to how much the end buyer pays. So the actual question I have is, in your presentation, you had mentioned that as of today, China controls much of the resources that are used in batteries. So how does the cost of your resource mined from the ocean compared to the material costs from China? Is it cheaper or is it more expensive? So in other words, does the end buyer, the battery manufacturer, pay less or pay more by buying resources from your company?
Well, can you see my screen now with a table on it?
Yep.
Yeah. So this is, I'll go to this chart in a moment, but one of the strategies that we are rolling out is to build a category around low impact ocean metals, because I think that we will be able to measure every single thing we do. We'll be able to measure how much CO2 we generated. We'll be able to measure how many trees we cut down, how much biomass we impacted, how much child labor we used, how much water we used to build that battery. And so when we can do that, you know, I think consumers will start to take note. And I think what will happen is that we'll be able to build a category around ocean metals and their lower social and environmental impacts. And I hope what that will lead to is consumers favoring brands who use these metals. Mm-hmm. So that's the first thing. This chart is in mining terms known as a C1 cost curve. And basically, it shows you the cost of producing 1 pound of nickel. Now, our project is polymetallic, but more than half of the revenue comes from nickel. And that's a great material to be in, because a battery cathode is mainly made up of nickel. Has a 75 kilowatt battery has about 56 kilograms of nickel. And so how this was prepared by Wood Mackenzie. And so every box is a separate producer. And the width of the box tells you how much they make. And so the blue box is us. And so imagine our box will expand by 10 times. And the height of the box tells you the cost of making a pound of nickel. So you'll notice here that we have a negative cost. It costs us minus $3.11 per pound. And the reason for that is that our byproducts, our copper, our cobalt, and our manganese generates much more revenue than our total cost of operation. To our left is Norilsk, which is a very unique sulfide deposit up in Siberia. It's as much a platinum palladium deposit as it is a nickel deposit. But what they can't do is expand. And so they're locked into that sort of production. Whereas we can expand, you know, you can put the nodules on a boat and send them east, west, and south. So, so when you say, you know, what's going to happen to price? The market sets the price. And if you look at those producers on this chart to the right, well, they're the high cost producers. And what you find, as you'd be aware, is that when prices are high, the incentive price encourages people to go and develop new resources. So what happens is more supply comes, and then what happens? All of a sudden demand decreases, and all of a sudden the markets are oversupplied. So providing you're in the bottom quartile, and I'm sure you're all familiar with that, providing you're in the bottom quartile on cost, you know, you can just take price. And in our case, we'll always be in the bottom quartile, largely driven by the very high grade of the material in here. And so if you look at the demand supply curves for nickel in 2025, depending which bank you listen to, you know, the shortfall will be between 1 million and 300,000 tons per annum. That's in a market today that's only 2.5 million tons. So, you know, and for those at the bottom end, they're just projecting it out another year or two. So does that answer your question there, Philip?
Yes, it does. Thank you.
Sure.
Let me ask one final question, just synthesizing a couple of things, because I know that you guys have spent a lot of time thinking about how to minimize the environmental impact of taking stuff from the sea floor. So maybe just we could close kind of on that, just talk about some of the work that you've been doing on the scientific side in order to try to understand how to do this in the best possible way.
Yeah, totally. Well, you know, I spend a lot of time, you know, dealing with scientific communities and earning that social license, if you like, because, you know, for me, it makes so much sense, right? If you think about the environment in which we're operating, the abyssal zone, it's the biggest, most common area on the planet. It just happens to be on the bottom of the ocean. compared to going into most biodiverse areas, rainforests and the likes, and destroying those environments. But a lot of people will say, yes, but look what mining has done to land. You know, it's oil and gas even, you know, it's had a lot of externalities that have been created. And so, you know, we want to make sure that through our scientific research programs that we're in the middle of now, you know, we get the answers to these questions. You know, we want to make sure that we don't make stupid mistakes. And as an organization, you know, we make commitments. And one of our commitments is that showstoppers are showstoppers. If we came across evidence that said this was more negatively impactful than what we're doing on land, then we would stop. We would absolutely stop. We would pivot into something else. We'd pivot straight to, I don't know what we'd pivot to be honest. I'd probably have to go to the pub for about a year, but you know, we'd pivot into something else. And we want to be proud of everything we're doing. And so if you look at our website, you'll see we have a very strong scientific team. I have Greg Stone on my board. He's one of the world's leading ocean scientists. He was the chief scientist at Conservation International for 10 years. You know, and I asked Greg to come and join as an ocean elder to say, come and protect the ocean. Let's make sure that everything we're doing here, you know, exceeds the requirements, meets the scrutiny of future generations. But, you know, sometimes there'll be a small percentage of community, and generally they're people inside NGOs, who just think we should do nothing. You know, we should stop consuming, we should just recycle everything, but they haven't done the numbers. It just doesn't work. It will work in the future, but the question is, you know, and this is a challenge that society is going to have to answer. You know, every single thing we do on the planet has an impact, but the question is, what has the least impacts? What are our impacts? And that's why we completed our white paper, which did a full life cycle analysis compared to the known impacts of land-based mining. And so it's, you know, the environment is the big one, right? Because what you don't want to do is to be producing metals and, you know, customers saying, I don't want to buy products with those metals in them, you know, which would be a horrible situation.
Great.